Welcome back, guys, to the channel. Today, I want to just cover a lesson on understanding trend lines and charting. Okay, we have so many people come in the chat room that just buy random plays at whatever price they dare please, and they're losing trade after trade or making a lucky win, so to speak. But there's a rhyme or reason why charts make the trends or the bounces or the resistance hits or supports and so on that they do make, and it's very important to understand where you can best judge this chart of where the direction is going to go based on how it's come from. Okay, the history of the chart, that's kind of how we guys as option traders want to distinguish, okay, what's the direction of our trend today, what's the trend of our trend later in the week, and so on. So I'm going to cover a little bit of a lesson here on how to judge this stuff. And I'm using actually Trend Spider. I'm going to put a link in the description down below. But Trend Spider is a computerized algorithm that literally draws the trend lines for you. I actually started when I was, doing before Trend Spider came along. I was having to draw my own trend lines. But many people are like, well, why do you got to draw trend lines? We're just waiting for support or resistance literally on a horizontal basis, or some kind of Fibonacci numbers or something. But there's there's a lot more to it. Okay, charts are literally based off patterns and trend lines to really get the best results, and these work literally 100% of the time. I mean, it's literally rare that anything fails unless you get a massive support break or massive resistance break, but that chart always hiccups to some degree on that support line or that trend line, unless some massive news is to come in and just destroy that support and break down a lot lower support and so on. But I'm going to cover SPY. We've been using this as a market indicator as the market's been crashing, and having its massive setbacks. And so we've literally been in this consolidation period since August or April 9th, of just sideways up and down action between the channel. Okay, so it's very important to start judging where the channel is trading. How is the stock trading within its channel? And when you know the channel, you know how to start buying your calls, when to exit. Timing is everything in charting. So I'm going to cover a little basis here on how we guys profited in a big way on puts when we knew the top was coming here on SPY. So in this exact scenario here, I want to go ahead and pull up the daily chart here. This is a daily chart. On each candles represents 1 day of action on the specific chart. So what I'm covering here is this candle right here. This was on May 12th, I believe. I'm going to go ahead and click this off real quick and make sure. But yeah, May 12th, this was Tuesday. Yeah, May 12th, Tuesday. This was May 12th on Tuesday, and you guys see how this was literally forced into a wedge based on this trend line. So going back here, you're going to look at the white trend line, and you're seeing that from our bottom in this area right here, we've hit we got the start of our trend line here, and it bounced off of here, here, and here. And I knew we were getting in a very tight area because this has got an upper trend line from these 2 points. Okay, after this day, we've literally got ourselves into a rising or an ascending wedge, so to speak. So in that aspect, it's like, okay, well, this candle for the next day, are we going to start below the trend line or above the trend line? And when I saw the opening of the day starting above the trend line, I knew it was going to most likely be a disastrous day unless we got some strength to shoot through the top of the line. Now, this line, this white line, is drawn from when the stock first did its massive descent on February 20th down here to February 28th and then bounced. Okay, so we had that bounce way over here, and it did its little up thing before it stopped, finally made its crazy lows down in the 218 range. So that line has literally been set in stone from the opening of this candle back in February 28th all the way across to where we hit resistance on April 29th. And then the chart came back down, met that trend line that we've got focused on from March 23rd up here, and now it's followed that guideline or that path. Okay, so when you understand how to know where the trend line could be going, it's best to judge what could happen. So this is another point. You have to have 2 points of contact in order to make a trend line. Obviously, 3 points of contact is more of a confirming trend line, but 2 points of contact is literally all you need to know the angle of the line that is going in whatever direction it decides to go. So we've got 1 point of contact here, 1 point of contact here. this day started literally here. Okay, when it's a red candle, that means that the opening day is at the top of the body. Okay, if it's a green candle, it means the opening day is the bottom of the candle of the body, and then it goes up, making it a green candle. So in this sense here, it's kind of a ridiculous situation, but that candle opened right here. Okay, literally almost at the top, and I think it was around 10:30, 10:40 or so when we bumped our head on a double top area. Okay, and like I said, that is a massive resistance, and I felt inclined that that was not going to break through on this particular day. We had no strong fundamentals for the markets as a whole to show that we got some serious recovery in order. You know, at this point, everybody's thinking bearish and market recovery and you know, all this other stuff that's overbought. And with this sense here, I knew this was a strong ass resistance area because we had 4 candles that, or 4 daily candles that represented this as a strong resistance. On this day, we bumped our head, and what do you know, we broke through this line. But if you guys that are day traders and are not watching a daily candle, it can be very frustrating to understand why is the stock falling? Because look, I'm going to pull back for May 12th here, and we're going to go back to a 5-minute time frame, okay? And look at this. TrendSpider, it's awesome for trend lines that our algorithm in here, and I don't have to draw the lines based on the peaks and valleys and so on. And I know where the chart is going to start trading within its channel. So going back here to May 12th, right here. This was a Tuesday, like I said. The chart made its big push the previous days, and it's still pushing up, her kind of sideways action, so to speak. But look right here, about, let's see, is this, this shows 1 o'clock. Yeah, maybe it was in the afternoon. But we had our first drop on the opening day. It dropped down. We got our push up here because it gapped up there. Like I said, it showed way up there on that daily candle. I'm going to represent it here on a second time frame just to show you on the bottom here. Put this one to daily, and you guys can judge it while I'm looking this at the same time. So as you see, the opening of this candle on May 12th started near the top, okay, near that resistance point. We had obviously a little price action that went above it, causing that wick on that candle to hit that little bump right here, okay? And when you look at this one here, that was literally that wick, okay? You see the date stamp there, May 12th at 9:30 a.m. So we had that little wick touch that red line, okay? And the opening of the candle was right here, and then the close was right here, and it, you know, dropped in a descending way that came down here and bumped off this trend line, okay? I'll show you the price action on that. Let's see, 291.55. So it bounced, yeah, it literally bounced right on it. 291, right on that white line, and that got me a little bit worried there, but we went sideways for a while. Then all of a sudden, we broke through that line when we hit the 292 area, because this line is sloping up to a degree that it has to start breaking through, penetrating with a wick or closing the candle before it or so on. So at this point, I had our team ready for puts, okay? I knew this day had to be either a call or put day in a massive way if we broke the upside or we broke the downside. But us as day traders, you're looking at a 5-minute or even 2-minute time frame, and you're not understanding, okay, well, why is the stock going to drop here when I'm just trading on the daily chart, so to speak, you know, with my 2-minute candles, judging it off of the old horizontal, you know, resistance or support line to kind of go from there. But as you guys see, at 1 o'clock roughly, yeah, 1 o'clock, 1300 hours there, we dropped in a massive way because we broke through that white line, okay, that trend line that I've gotten drawn from these daily trend line all the way from the freaking lows of 218, okay? When you've got both of these charts set up to where you can constantly watch it, I like to understand, okay, well, where's the chart going? So it makes it very easy to understand, okay, if you want to swing overnight for puts, calls, or whatever. But I'll get to that point on these next candles here. So on Tuesday, we had this massive descent, and we dropped literally from 292.57 to the close of the day all the way to 286, okay? And as soon as I seen this happening, breaking through here, I knew we were set for the 280s to start happening. And I think many of the guys been between 50 to 100% on profits, on gains for just puts, on option puts for SPY during this period. I think a lot of us played 290 and 285 puts for expiration, literally like 2 days. So it was a crazy scenario. But it's a wild situation to judge that. But as a day trader, you're like wondering where the chart's going to go next, and you've got this uphill path, so to speak. Slightly higher lows, so to speak. And you're like, oh, okay, well, the stock is going to continue trending its way, only to end up being a massive drop. And I've got people on Twitter like, why is it dropping? Why is it dropping? Well, you got to understand that the daily chart has trend lines that it breaks as a serious sign of support or resistance. And during the next day, it was literally another downfall. Okay. And this was the next day right here on Wednesday, May 13th, to where we dropped and then we hit this blue line, okay, causing this jump back up, which was a support at this zone, and then dropped massively all the way back through it, closing for another red day from an opening price of 286.20, but we did see 287.19 there, all the way to the drop of 278.98, but with a closing price of 281.53. So crazy day, crazy situation. I did not buy any overnight calls or puts. It's not the smartest thing in the world to do because, like I said, this is all pure speculation, especially when you're in a indecisive, hard support or resistance zone. But I'm just trying to show you through this lesson that how important trend lines can be. And the next day, obviously, we shot up. We opened right here at 278. It was actually a gap down, but we opened at 270.88, and they pushed it all the way to the end of the day, which will go to, let's see, that's May 14th. Let's see, May 14th right here. You see that this day was actually a great day for calls. Okay, we dropped down, but we pushed all the way on May 14th into a very tight resistance. Okay, and that tight resistance gave me some good confirmation to hold puts overnight. And I bought some next day expiration, May 15th expiration puts for 282. 282 strike price, May 15th expiration. And you know what? I bought them at 76 cents. The next morning we gapped down all the way down here to 282. I was spot on with that strike price, and I sold them out at $1.59 a contract. Okay, over 100% gains, just an overnight hold. Okay, you put $10,000 in there, you wake up with $10,000 extra dollars to your gain. So easy way to do it, because the harder a stock gets pushed up to resistance, the likelihood of a gap down, because it did not close above resistance. Okay, you got to have that confirmation to understand where that resistance and the support line is. Obviously, yesterday being Friday, they pushed it up once again to this trend line in a very hard way at 286.28. And you can guess it, I'm holding puts for over the weekend as well, because most likely we could gap down maybe $2-3. It's hard to say. We'll see. And maybe I can swipe another 50-100% gain on those puts. But as long as it stayed below that blue line, I was a-okay for some overnight swing. But if we closed above it, it gives you a little more clear indication that, okay, we still got strength in the bull's favor for SPY. And as a day trader, cash is always king. But if you understand these trend lines, it can be very important to make some decent money on some overnight swinging. But like I said, as a day trader, I'm very fluent on trading trend lines only. You want to understand how to observe these trend lines, making sure you're looking at a daily chart, those hard and support and resistance lines. If you fail to look at this, you're just looking at all this jumbo that happens during the day without understanding that could cause a serious avalanche, or this could cause a serious squeeze up, so to speak, if it broke to the upside. I'll put this back on a 1 minute or one chart here. But just give you an idea of these trend lines. I used to draw my trend lines, and I'll actually go back and cover that here on TradingView, which is a free platform. I'm not dissing it as well, but you're going to have to draw your trend lines. This was on SPY as well, and as you see, it looks like a kid's coloring book. But I literally had to draw my trend lines every single night before the day started to understand where is the potential channel going to start going. Okay, and you can go back as far as when we started here, that I had to start doing this to best judge the direction of the chart. Because like I said, history always repeats itself. Okay, there's a reason why this stock bounced, off this line that was literally drawn from way back here and constantly back and forth. And there's a reason why this particular channel, the chart traded within this channel, the two red lines and so on. There's a reason why those charts trade in these channels for some specific reason. Okay, it's an old trend line based off an old resistance or support that it bumped its head, it could not break through it, or it bounced off of, or it broke through it, or whatever it may be. the best way to judge it is to have those diagonal lines. Okay, so whether you're trading on pivot points and you're just playing with, you know, side left to right action, you're not going to get the full benefit of understanding the support and resistance. And I'm literally buying my calls based on the hard supports, buying my puts based on a hard resistance that the chart seems to fail at breaking through. So going back to my trend spider, so it's very nice to have these lines. There's more lines that I can throw in there. Like if I want to add more lines, you can start using these, but I like to have the most relevant lines because, like I said, this is all computer generated based off of past resistance and past supports that have contact of at least 2 hits. Okay, that's how a trend line is always drawn. So when we're understanding it, it makes it very easy to base off what that's the channel the stock is going to trade it. I'll cover a little bit on NVIDIA because NVIDIA had a really nice run yesterday on Friday, May 14th, or May 15th, excuse me. And literally on this trend line, we had a trigger right here. Okay, this was a daily chart. I'll go ahead and pull it onto a daily chart, but I had an alert set for 3 days before this happened. Okay, and that's like I said, how important it is to have that. But I had this triggered right here on a touch, and this happened on the 3rd candle that, you know, this line was being followed multiple times on NVIDIA, showing some solid upward strength. Well, the moment I wanted it to, you know, it was around this area where it broke through these lines. I was like, okay, well, the next time it comes down to this white line, I want to get alerted or notified. And you can set alerts by right-clicking on it, creating the alert, so to speak, to your settings, and then get alerted for the chart whenever it does. And it'll literally send it to your email and to a text message on your cell phone. So with that being said, I wanted to be alerted when this happened. This literally happened on May 13th. And then look what happened. As soon as it hit that support line, what do you know? We got some movement from here. And then the Friday, we had a massive engulfing candle here for the bulls. So in that sense, this literally started, this was triggered at 308 in price. Look where NVIDIA is at now, 339. Okay, beautiful solid action had you been alerted right here, based on a trend line that has been drawn by either, you know, humanly, if you understand how to draw the lines, or by the algorithms that are, you know, greatly appreciated here with TrendSpider. So I love to be able to have that concept because, like I said, before TrendSpider ever came along, I was drawing my own lines to best judge the direction of the chart. It's that channel, understanding where the stock may be going. So with that said, you could have had an easy early entries for some calls for maybe 330 strike, expiration a month out or whatever contracts you want to play as an options player that would adamantly give you probably well over hundreds of percent in possible gains when this finally broke up and never closed a candle below that line. Okay, so in that sense, that's why it's so important to have those trend lines, be able to draw through them. This particular scenario here broke down through it, but pushed back through it with the following day, which could also be apparent to maybe the current market. I'd have to look back on SPY for that aspect, but you know, we use SPY as a current market indicator. It can be very, you know, decisive to what can actually happen for the day. So with that being said, guys, like I said, it's very important to have those trend lines, draw them, be very useful for them. And when we go back on a 5-minute candle here for NVIDIA here, I can clearly show you. And before the start of the day, guys, I'm gonna pull these trends off right here. Before the start of the day, I like to understand where the stock is going. Okay, let's just say it's a brand new stock, and you hear, you know, you're looking at your current watch list. You know, you always keep your watch list up here on the right, and you're going to understand where it is. Well, before I enter a call or put action, I always want to see 2 lows and 2 highs before I determine where the stock could be going. Okay, and with this being said, automatically I see a higher low, so I could draw a trend right here. Okay, so as the stock is coming down, it's very important to understand as a candle reader too that you have 1, 2, 3 change of direction candles. Okay, I've got lessons on these candles. Okay, and when you see these candles, it shows that the bulls are more in favor of the stock going up, and the bears do not have the strength to push this down much further. Okay, because it's near support or a nearly daily trend, so to speak, and that could start a potential bounce. So the more you guys come a little bit more aware of it, this is where a trend would start. Okay, those candles end up being higher and higher and higher until you got some bullish engulfing candles here that push the stock much higher. So with that being said, when you see these change of direction candles based on this trend line, it can be very useful for you guys to be able to be closely watching. And this is a 5-minute candle. And I love these 5-minute candles because they're, they're literally like up and down arrows, so to speak. You can change this to a 2-minute candle and it's going to show things a little different perspective, but very similar aspect as well. Right here. And you're going to have a similar change of direction candle as well, which is very right down here. Now the day, it's a lot more. Every candle represents 2 minutes of time. So you're going to have more candles in there. But here's where we got a first bounce, second bounce, new high, lower high, but higher low. Okay, so this could literally put yourself into a wedge type position, then all of a sudden break out. Okay, that's what you call a pattern movement to a breakout position. Okay, and this is literally a symmetrical triangle. Symmetrical triangles make some great patterns to watch for if you consistently watch for those patterns, because it has to have lower highs and higher lows showing a wedge type pattern to where the stock squeezes to a point where it has to pick a direction either to the downside or the upside. And in this scenario here, it picked the upside, causing volume within these candles for much bullish movement as well. So you've got two aspects, okay? Trend started, wedge, symmetrical wedge, and also you've got your trend started here for the day. Now, obviously, if I put TrendSpider back on, let you know it starts a trend in this direction. So as long as you have adamant control of the chart and watching at that, you may have entered right here, okay, on the breakout of that symmetrical triangle. Like I said, I'm just drawing these crude lines, but that's what you had your symmetrical triangle for the breakout for an easy entry as volume came on your level 2, and you could have bought right here, and your stop loss could have been any point of time where it decides to break to the downside of this line. Okay, I don't have my stop losses as like a 5% loss or $200 loss or anything like that. I'm literally basing my stop loss off of a pattern that decides to fail or break back to the downside. But this stock here on NVIDIA never showed strength to the downside. It showed strength to the upside. Obviously, when we got this trend started and all of a sudden you have a trend here that started, it shows a rising wedge, so to speak. This shows more and more strength. So right away, I understand that this could be resistance. If the stock failed to break here, you'd be like, okay, well, this could be an area to take profits per se. Or if it broke through this line, this would be an area to take my loss. But you would obviously be in profit holding the call option from way down here. You're just cutting it and taking the profits for a specific reason because the trend is no longer showing strength through the rest of the day. But with that said, broke through that rising wedge with strength, causing massive engulfing candles for the bulls for more upside. And we got resistance up here. We'll see what it does Monday. It could have more strength or it could have some relief and come back to the line and further go up in the upwards direction. That we will see. But, as things go through, we'll just have to determine that and base our day-to-day action on that. Going back to the daily candle, though, you can see that we closed above this resistance line. We show strength that it could push a lot higher. Okay, so that's why I say it's very important to have both charts up if you can. TrendSpider, you can do multiples of 4 charts if you want, all in different time frames and be able to watch them. But it's completely your preference. But I like to base it off of 2 charts, be able to watch my daily chart as well as a 5-minute chart. And I keep another monitor on my right here for 2-minute charts to judge the direction as a way of up or down based on the candle being just 2 minutes of time. So like I said, very important to understand trend lines, understand patterns. I teach these stuff in my courses, but I'll put a link in the description down below to be able to get you guys set up if you guys want to sign up for TrendSpider. There is a 30% coupon using my code MM30. But you guys can do it. It's very cheap, and this is a massive influence for you guys as traders to be able to watch your trend lines and have a computer freaking draw them for you. How much better can you get than that? So I'll put a link to go to the site if you guys are interested. But it's very important to have those lines, how I judge it, how I judge my trading, because in order to be a successful trader, you have to have some consistency, okay? And the more analyzing you see on a chart, the more consistent you can be. Like I said, you don't want to be that mumbo jumbo who just buys in the middle of mid pattern or mid candle or whatever it may be, and not understand the channel that the chart is going to be trading in. Obviously, you buy mid candle up here near resistance, all of a sudden it starts showing downside, like you start freaking out because you don't understand where this chart is headed to or where it's going, and you end up selling for a loss only to realize that was near support and it's for a bounce. So it's very important to have that stuff. Trade without emotion. You're understanding where the stock is going. It's based within its channel. Why freak out? Okay, but the more you understand that channel, the better. Okay, and like I said, it's not horizontal lines; it's diagonal lines that really make a successful trader understand where a chart is headed. Anyway, guys, if you got questions, I'll put descriptions in the or links in the description down below of this video. You guys can check out our chat room. We're growing by the numbers in a massive way. You guys get to actually trade live with me and the other pros and my other students in our live stream chat room with Zoom. And you guys can see me draw these charts every single day. I'm showing them up on the screen. We're playing calls on these things. Actually, one of the members I will show you here in the chat room, which we got a lot of basis off of Zoom, but we had one of our students that started out that literally bought some calls for SRNE here and banked some serious coin. Okay, this is literally an $18,000 investment that ran 1,000+ % overnight based off of her charts, and gained a massive the total return $169,000. Okay, who would complain about that, turning $18,000 into $169,000? But you guys can kind of read through it. Mike promised I won't take any more risks like this, but dang, it paid off. Obviously, it did. I'm very proud of her. But she's basing things off of charts and things that we're teaching in the courses, and it best judge it. And it's great to see others succeed in any way that I can possibly help. But it's phenomenal to see that kind of action. But anyway, guys, if you have any questions, feel free to hit me up on Twitter or comment on this video below, and I'll be happy to answer whatever I can. You guys have a fabulous day. Thank you.